Hi, everybody. My name's Anel Greenmore, and I'm a mortgage broker. I am sitting here today with my friend and colleague, Toma Johnson.
Yes, thank you, Anel. My name is Toma Johnson. I'm with Drive Real Estate, and it is a pleasure to be here.
Toma, there is a topic I would like to discuss with you. I feel that there's a lot of uncertainty for first-time homebuyers on what the proper steps to follow when you are trying to get into your first home are.
So the first steps that you're going to take as a consumer to buy your first home is assemble your lender and agent team.
Absolutely. The most important thing about a major transaction, such as buying a home, which will be likely your biggest transaction to date, is to have the correct team, the right people that you trust to assess you every step of the way and guide you in the right direction.
Right.
This is the first time that the consumer is doing this process, but this is what we do every day. So our job, I believe, is to make it as smooth as possible.
And as your realtor, my job is to make sure that we help you find the right house. And then once you find that house, to help you negotiate the contract, help you schedule all the inspections and everything. Just make sure that the overall process is smooth and you are well protected.
It's definitely important that you have the right people on your team, somebody that you can trust and confide in to help you through the process, both on the lending side and on the real estate side, which is going to be the bulk of the transaction process.
Right. And it's a tough process for some people. So that's why having people with experience, having representatives that know what they're doing is extremely useful for you.
So the other topic that I think is relevant to this is the fact that people think that a first-time homebuyer is somebody that has never owned a home, and that is not so. A first-time homebuyer is qualified as somebody that has not had ownership or interest in a property in the last 3 years. So essentially, if you owned a home 3 years ago, you again are a first-time homebuyer.
Right. And that's, I've run into that several times as well, where people say, well, I can't use, the first-time homebuyer programs because they own the home before. But what you just said is correct. As long as it's been more than 3 years, you're considered a first-time homebuyer in the government's eyes anyway, and that's all that matters.
And that qualifies you as a buyer for down payment assistance, maybe closing cost assistance.
Right.
Of course, the next topic would be credit. A lot of programs are out there to help you with down payment assistance, but they have different parameters, different credit scores that you have to meet as a minimum to qualify for those benefits. Of course, the better the credit, the better the program that you are eligible for.
And the lower your payments are, right? The lower interest.
Of course. Yes, lower the interest and definitely maybe even the repayment process of those down payment assistance or closing cost assistance programs vary as well.
Right.
So we'll find you the correct path, right? The correct program to fit you and your family in. A lot of people are concerned with how much is it out of pocket. Right? It depends on what programs we are using. If we are coming in as a FHA buyer, then your out-of-pocket is 3.5% of your purchase price, so $3,500 for every $100,000, and you have closing cost, which will probably equate to about 2% as well of the transaction process.
Now, let me ask you a question about that. Do you run into a lot of I know you are a veteran, you were a Marine, right?
Yes, sir.
Right. So do you run into a lot of members of military members who think that down payment means no money out of pocket?
Absolutely. Right. A lot of people that qualify for down payment assistance will still have closing cost assistance.
Wow.
A Marine, any military member that's VA loan eligible will come in 100% financed. However, closing costs, the best way I have found to relate to the consumer that hasn't purchased a home, what closing costs are, is a simple question. You may have not purchased a home, but you've purchased a car.
Yep.
When you purchased that car, you had the sticker price, what the car cost, but you also had insurance, taxes, registration, title. All of those fees in a home transaction are considered closing costs. It equates to about 2% of the purchase price. And that's only a percentage because insurance and taxes vary from property to property.
Right. And in many contracts and agreements and transactions when it comes to purchasing homes, you and I know that a lot of times we are able to get the seller to contribute to the closing costs via credit. So, a lot of that stuff can still be worked out for.
Which is where a realtor comes in so handy, because you know those tricks. You know where to negotiate, what the value is, what you can offer. And that's definitely a subject matter expert, right?
Yeah. And it's common too. I would just say to people come to the lender, tell them what you have, what your financial situation is, and then they can put it together a package, specifically meant for you. And then they can communicate with your realtor in regards to how to, submit the offer to make sure that all of the costs are covered in the contract.
Absolutely. We can always work with your numbers, right? There's so many ways and there's so many programs that make this accessible to you as a first-time homebuyer. Whether you have a lender credit, a seller credit, whether you have down payment assistance, whether you have closing cost assistance, the key would be call us so that we can assess you and tell you what you may qualify for, what is in store, what your out-of-pocket expense. A lot of people also, as a lender, I can tell you, fixate on what they want to pay as far as the price for a home. And I have always found that is better for you as the consumer to come to terms with what your comfortable monthly expense is. Let me do the math for you and tell you what we can buy with that monthly expense.
Right. And we do have in our business, and it happens a lot, even with me, when we're showing homeowners properties, and sometimes we're showing them properties that they can't afford.
Right.
And they don't know it because they haven't taken the proper steps. So first step would be to talk to a lender professional, Anel here. And then once you're done talking to her and she has your pre-approval for you, go ahead and come down my way and I'll take care of you. So Anel, in this next segment, I want to talk about something that I tend to run into a lot when I'm speaking to, clients and potential clients. And that is that many of them believe that they should wait to purchase because they believe that the market is going to hit some type of, fallout, some type of market crash. And a lot of them relate what's happening now to what happened in 2008.
Are you referring to where the interest rates are, the prices are?
Prices. I'm referring to prices. Most people feel like, I don't want to say most people, but a lot of buyers who want to buy right now use waiting for the market to crash or the prices to come down as an excuse not to buy.
Because we would like to think that because prices are higher in California than they have been historically, that they're going to inevitably slide back down. Right. However, we have data that shows us that there is absolutely no reason for prices to slide.
Right.
Never mind crash.
Right. And, I want to take everybody's eyes to this slide here and just to show you guys a little bit of data. If you look at household growth and household completion, in the blue you have household growth, and in the gold you have, or is that orange, you have annual completions. So in 02 all the way up leading to 05, you saw the household growth going up and up and up. And the annual household completions, meaning homes that were being built, was keeping pace with households that were available, right? But then in 06, you saw a crazy drop, a very steep drop in household formations, so to speak, right? And they were still continuing to build those new homes for several number of years, outpacing how many people needed homes.
Right, which is what gives us a supply and demand formula for any business. I don't think the real estate business or the housing market is different from any other business in regards to that.
Right.
It is a supply and demand driven price, right? So as you can see on the same graph, once we're getting closer to the 2017 timeframe, the formation of households is outpacing the building of properties.
Right.
So we have a much higher demand, then we have a supply. And for any business, that means the price will continue to be driven up.
So basically, one of two things has to happen for housing prices to go down, right? Either demand has to drop and then the housing prices will go down, or household formations or homes being built has to go up.
Correct.
Right. Causing more inventory to meet the demand that's possible. Right. So either one of those has to happen. And it's the data tells us that that's not happening. All right, Anel. So what I'd like to do is have you take a look at one more slide here. And this is the foreclosure activity, because I do run into a lot of members of the community that say, oh, foreclosures are way up now. They're over twice as much as they were in 2020 and 2021, right?
Do you know why?
Why don't you tell me why?
Well, that's because foreclosures were not happening in 2020 and 2021, not even 2022.
Right.
We had forbearance. The banks were not going to foreclose on your home. So in comparison to those, yes, of course, we have more today. But is it significant enough? Has it been an increase? If you can refer to the chart, you can see that in 2019, there was almost twice as many foreclosure properties going to the market than there are today.
Right.
So does it appear to be higher? Yes, it appears to be higher in comparison to the years that foreclosures were not happening because of the pandemic.
So in other words, foreclosures are not going to have the same impact that they had as they did in the past.
Correct. You are not going to see foreclosures happening left and right like we did in 2009.
Right.
This is a completely different market.
Way different market.
And it doesn't matter what the rate was, what the price was, what the circumstances were in 2009, 10, 12, 15, or even 19, even 2020. We are today, and this is the market that we have to contend with.
Right. So, and what I'd like to say or add to that basically is prices are not going to come down like they did. The crash is not going to come. As a matter of fact, they're highly likely to continue going up.
Well, if you paid attention to what the inflation rate went down to, we are now, as of January, at 6.5. The Fed kept raising rates, trying to prevent inflation from climbing.
Right.
We've accomplished that.
Right.
So when the rate starts sliding down, prices would slide up because that's naturally what happens.
Right.
There is no data that supports that there is going to be a drop in value in our real estate.
Right.
Best time to buy a home is always going to be when you can.
Right.
We're in California, so the longer you wait, the more you pay. That is just in our historic price hikes, right?
Right. Agreed.
So now that we've discussed what the correct steps are, where the state of the market is today, in our humble opinion, what is the next step to take?
The very next step for you to take is to set up your free, no obligation consultation with your lender.
Absolutely. We could do it in person. We could do it on Zoom. We could do it over the phone. We are absolutely flexible. We will help you create a path to achieve your goals.
Correct.
You can always contact me at 760-594-0608.
And you can give me a call if you like. If you have any questions regarding real estate, 951-356-9586.